day to everyone. Today we're going to talk a little bit about Singapore Business Trust. This is a very niche area for retail investors, and I thought it'd be interesting to share my thoughts on this very specialized sort of asset class. And for this presentation, we will be focusing on 5 businesses listed on SGX. I understand that hospitality trusts that are known as stapled securities are partially business trusts. We will not be discussing that. Perhaps in a future video episode, we will talk about hospitality trusts, specifically hotels in Singapore. All right, but today is not the day to do that. These are very diverse investments with a very low or actually negative growth potential. All right, so let's see what ticker symbols we'll be looking at today. All right, we'll be looking at FSL Trust, First Shipping Lease Trust. We're looking at Asia Pay TV Trust. Okay, and this is Taiwanese cable TV. We'll also be looking at Keppel Infrastructure Trust, that is a sort of a very ESG, very environmentally aware kind of trust. Okay, that has a very high yield. And there is the HPH Trust, Hutchinson Ports, which is buying a port in Hong Kong. And finally, my personal favorite, which is Netlink NBN Trust, where we maintain and operate fiber cables in Singapore. So if you look at all these business trusts, you notice that the underlying business, they're totally different from each other, right? So it's not really easy to analyze them as a group, but we're going to try to do that today. Okay. Now, for the folks that really enjoyed the section and the discussion on real estate investment trusts, this is a reminder that the business trusts and REITs are totally different instruments. So for real estate investment trusts, trustees and a manager are different entities. You can vote to remove a manager with 50% of the votes. 1/3 of the board must be independent. And very importantly, there is a maximum gearing of 50%. So if a REIT is over leveraged, that's actually not allowed, all right? And to be forced to engage in rights issues, all right, to avoid this 50% gearing, okay? And they must pay out 90% of their cash flow as dividends. So if they were to give back 90% of the cash flow as dividends, they will not be taxed at a corporate level. So on the whole, REITs have done very well, right? And in the previous series, I think that has received the largest number of views, all right, between the discussion on banks and real estate investment trusts. So business trusts, I wouldn't say it is as successful as an asset class. Okay, the differences are the trustee also manages the property. You need 75% of the votes to remove a manager. Majority of the board must be independent. There is no maximum gearing and there is no payout condition. All right, so this actually gives the manager a lot of power, right? 75% of the votes entrenches the manager in power. And so because of that, maybe that's one of the reasons why retail investors have not really warmed up to this particular asset class. Okay. All right. So let's look at the numbers for these 5 business trusts that we're looking at. If you look at the correlation matrix that I have that measures whether the business trusts were to go up and go down together with each other, you find that the numbers in this matrix is particularly low. What this means is that they don't seem to move in tandem with each other like the banks or even the REITs, right? With the REITs, you can get maybe a correlation of 0.3 to 0.4. With the banks, you get 0.7 to 0.8. But with business trusts, you're looking at numbers between 0.2 to 0.3, sometimes as low as almost 0. That means they are all individual investments that move independently of each other, right? So very, very important, right? This means that if you were to, for example, buy the 5 business trusts, they will provide adequate diversification against each other, all right? Now, more importantly, if you were to consider these 5 business trusts and you calculate the correlation between our Straits Times Index, which is 50% banks, you'll find that the correlation is also very low at less than 0.4. And same for the REITs. Okay, that means you can have diversification if you already have a portfolio that is real estate investment trust and banks. Adding a little bit of business trust actually would improve the diversification of your portfolio. Okay, so but it also means that when you actually buy these business trusts, you have to be more careful when you assess each and every investment. They're totally different investments, so you can't say that just because I know a little bit about Netlink Trust, I will know a lot about Keppel Infrastructure Trust. You can't do that. You need to go through the analyst reports for each trust individually, all right? And this is not just do your own due diligence, but to do that individually for each counter, okay? All right. All right, so generally speaking, should we be impressed with the kind of performance for business trusts? Well, I guess the answer is not really. If you were to buy business trusts in equal weights, the performance is very similar to the STI ETF, right? Not a lot of difference, except that you're actually taking a lot more risk, all right? There are all these probability of crashing in a really dramatic way when you were to buy business trusts in terms of capital losses, although you find that these business trusts provide a very high dividend. Okay, so if you look at this table that I've generated based on dividend yield, sorry, my image is covering up some of the dividend yields. Netlink Trust is about 5.5 to 6%, that range. Okay, but if you look at the table, you will find very extreme ends on the dividends payment capability, with FSL Trust extremely high at 45%. Okay, very unnatural, and I'll explain to you why. Asia Pay TV Trust has always been very high yielding, 12.8%. But there is this idea that Asia Pay TV Trust is in a sunset industry, and so you can expect the dividends per unit to trend down very gradually every year. All right, that's why it's rewarding you with high yields, but there is negative growth. All right, and Keppel Infrastructure Trust is somewhere in between. It yields between like 9 to 11%. Okay. And it's not too bad. All right, what it can do is that it can actually increase the dividend flow of your overall portfolio. And if you add the Hutchinson ports into the mix as well, you get something very close to 10%. All right, and naturally, if you've been following my videos, you know I have a thing for Netlink Trust. It doesn't give 6%, but it is extremely stable. Okay, and it can actually reduce the amount of risk if you were to introduce it to your portfolio. All right, so business trusts are definitely not a sexy instrument compared to real estate investment trusts, but they are definitely high yielding. Okay, they are favorite if you are the kind of more elderly kind of retail investor. You want to juice more dividends from your investments, but over time, you know that the value of the capital might drop slightly over time. Okay, so that's how you look at business trusts in Singapore. Okay, so straight off the cuff, right, in my previous sections, I talk about why I like a particular stock. So now I'm going to talk about why I do not cover FSL Trust when I teach this section in greater detail to my actual students, all right? And FSL Trust is a very specialized kind of trust. It involves chartering ships. In 2024, the trust sold 2 boats last year, I think, and there are about 6 of them remaining. So this is one of those counters that is like a cigarette butt. It's got a few puffs left. If the trust can unload more ships, then you might be able to realize some value in your portfolio. All right, dividends are high. Payouts, however, are irregular, and we didn't get any decent payouts in the year 2023. So that's the reason why I don't include it. All right, and if you look at the numbers very carefully, okay, you find that I'm sorry, everything seems to be covered up a little bit. Okay, I'm using this CapCuts the first time round. Okay, but there are several things I want you to take note of. All right, first is the high standard deviation makes it too risky for traditional dividends investors. All right, so the risk is very high. Okay, the skew is covered by my face, but the skew is high and it's positive. Okay, when an instrument has a very high and positive skew, okay, it means that it's like a lottery, right? If FSL Trust can sell 1 or 2 extra boats and return the sums that they've collected to the shareholder, then it is a significant gain in terms of dividends. You get a lump sum payout, right? And you get to recover a significant amount of your capital. And last year, when that dividend was indeed given out, the stock price didn't move a lot. It went down slightly, but it has since recovered to more or less that level. So hence, you have a fairly high annual return Okay, but that's the reason why I'm not covering it. It's a little bit like it could be a value stock, it could be a lottery. I don't cover this because my students actually enjoy regular yields. They enjoy a high dividend, and they don't really appreciate it if something doesn't pay in a particular year. Okay. All right. If you look at the remaining 4 business trusts, with the exception of FSL, then without FSAL's sale of ships and high return, the returns are actually not particularly good over the past decade. All right. And just an annual return of about 2.5%. Okay. It still has the skew has become negative. All right. So it is basically a high yielding portfolio, but there are certainly some amount of capital losses every year that you have to endure. Okay, and there is a very high maximum drawdown. So if you time the markets wrongly, you see that dip on the red line. If you see the dip on the green line, right? That's what happened at the early stage of the pandemic. Okay, so why do we still want to look at business trusts? Right, we can cherry pick them from ground up. So that's the first reason why we want to do that. We want to have very high dividends. Generally, REITs, you can get up to 6%, but if you introduce business trust into a portfolio, you can get up to 7%. All right. So when you balance it against banks, REITs, and business trust, there is better diversification. So you have more multiple sources of income. All right. So it's not something that you can totally ignore in the first place. Okay. So how would I look at business trust? You understand that higher yields make it less tempting to turn over your portfolio, and it drives persistence. So there is some emotional value in having business trust in your portfolio, all right, because it leads to higher dividends. Okay. Now, business trust, from my discussion, they are obviously very optional. They can complement a REIT and bank portfolio because it has low correlations and very high yields. All right. So that's the first point. The second point is that because the individual underlying business for business trust is so specific and so niche, every business trust need to be cherry-picked individually by looking at the business from ground up. So you need to look at analyst reports, and you need to individually flag out like red flags, right? So that's what I do with my students in my classes. We go through each of them individually, okay? And finally, holding on to business trust requires patience, as their distribution can drop. Okay, and but the high initial yields often can offset that. So overall gains when you buy a business trust is still a positive number. So you have to imagine your capital being returned to you over time, right, via these abnormally high dividends. But if you were to combine business trusts with REITs as well as banks, the good thing is that the capital losses that you will get from business trusts could be offset by capital gains from REITs or banks, depending on how the interest rate would go. All right, so this is certainly something that I think some of the older investors would not mind having. All right, and that concludes our discussion on business trust. All right, if you like what I talk about, you can click the link at the bottom and you can come for my next preview. But I hope to see you in my next discussion. And we're likely to jump into other instruments like Singapore Depository Receipts. Okay, thank you very much.